Have you ever looked at the price of gold and just felt like there are so many forces pulling it in different directions? It seems almost impossible to understand sometimes.
Yeah, it really can feel that way.
And your sources tell us that gold is actually considered one of the most complex financial products out there,
Right.
precisely because its price is influenced by, well, just so many factors all at once.
That's right. It's a confluence of things.
But today, we're going to try and cut through some of that noise. We're taking a deep dive into a stack of your sources that zero in on a very specific connection, and it's often an unsettling one. The link between geopolitical instability, war, and the price of gold.
A really crucial link, according to this material.
So our mission here is to dig into this material, pull out the core insights, and really understand what these sources are revealing about this relationship.
And it's true. If you're just trying to track gold prices by reading the daily news headlines, the picture can seem incredibly muddled. It's just confusing. The material you've shared suggests there are these deep underlying dynamics at play, especially around conflict, that you kind of need to understand to see the bigger picture.
Right.
And that's what this deep dive is all about, exploring those dynamics as they're presented in your source material.
Okay, let's do it.
So let's unpack the main ways these sources say geopolitical instability and war impact the price of gold. They really highlight two primary channels.
Two channels, okay.
The first one is the classic, widely understood idea of a safe haven.
Right, the safe haven. We hear that a lot.
Exactly. When the world feels uncertain, when there's political instability or maybe conflict erupting somewhere, investors tend to get nervous.
Understandably.
Yeah. So they look to move away from assets they see as risky, maybe stocks, bonds, even some digital currencies these days, and they seek refuge in what they perceive as safer assets.
And that usually means gold.
Traditionally, yes, primarily gold, and maybe also, to some extent, the U.S. dollar still holds that status for some.
Okay, so that first channel, the safe haven aspect, that's pretty familiar territory for most people following markets.
It is.
But your sources seem to dive into a second channel that's, well, maybe more provocative, maybe more controversial. They describe something they call an underground world, or financial magnates.
Mm-hmm.
What exactly do your sources mean by that term? And how do they claim this group actually benefits from wars?
Right, that's where the sources introduce this specific and, more controversial perspective. They describe these financial magnates as a powerful, sort of loosely defined group that they claim has historically aimed to establish a globalist, unipolar world order, one dominated by them, financially and politically.
A unipolar world order.
Yes, and the material argues that this push for dominance is now facing pretty significant resistance from nations seeking a different path, a multipolar world.
Multipolar.
They specifically mention Russia, China, and members of the BRICS economic bloc as sort of key examples of this opposing force.
So the sources see this clash, unipolar versus multipolar, as key.
They claim this struggle between those two visions is actually a fundamental driver of current global instability, and as a result, it significantly impacts gold.
So according to your sources then, this instability isn't just random chaos, it's actually tied to this specific struggle for global control.
That's the argument they present.
And the material apparently details the tools and strategies this dominant group allegedly uses to maintain their position, which the sources claim often leads to conflict itself.
Yes, they outline several tools.
What are some of those tools they describe?
Well, the sources describe it as a kind of carrot and stick approach.
Carrot stick.
So on the soft power side, the carrot maybe, the material points to institutions like the U.S. Federal Reserve.
The Fed.
Which they explicitly characterize, it's important to note, as a private bank created by these financial magnates, along with the U.S. dollar itself and the petrodollar system.
The petrodollar system, where oil is mostly treated in dollars.
Exactly. Those are presented as tools used to exert global financial influence.
Okay, that's the soft power, the carrot. What about the stick?
Well, the stick, according to the sources, involves hard power. They highlight military alliances like NATO as the hard power tools, which they claim are used to sort of suppress nations that oppose this dominant agenda.
And other strategies.
They also discuss strategic tools like divide and rule. They cite Korea and historically Vietnam as examples, suggesting this is still employed widely.
Divide and rule.
And they specifically point to color revolutions,
Ah, yes.
which they describe as externally influenced uprisings or regime changes, basically a means to cause chaos and overthrow governments that aren't compliant.
And they give examples.
They present Ukraine as a recent and, in their view, clear example of this strategy in action.
Mm.
And finally, they claim this group exerts significant control over global media to, shape public opinion and even, as they put it, brainwash audiences.
That's quite a detailed picture your sources paint of the alleged mechanisms. Quite provocative.
It is a very specific viewpoint presented in the material.
So going back to the profit motive, how exactly do your sources claim these financial magnates, as they call them, actually profit from war? You mentioned it goes beyond just the safe haven effect.
Right. The sources lay out several key mechanisms they see at play. Firstly, war itself is viewed as a tool to maintain global dominance and strategic control.
Okay, dominance.
Particularly in crucial regions like Eurasia, a perspective the sources explicitly link to the ideas of someone like Zbigniew Brzezinski.
I see. And second?
Secondly, they argue that war forces governments into taking on massive debt, huge amounts of debt.
Right, war is expensive.
Extremely. And this dynamic, the sources suggest, allows lenders, presumably connected, in their view, to these financial magnates, to potentially acquire assets very cheaply if these debtor nations default under the economic pressure.
So, benefiting from default.
That's the claim. Thirdly, there's the direct profit from the war industry itself.
Okay, the arms trade.
Exactly. The sources point to the sale of weapons, the stimulation of arms races between nations, and the direct benefits flowing to war-related industries.
Any examples given?
They use the current conflict in Ukraine as an example here, noting the high demand for arms fueling a global arms race. And they also point out that Ukraine's debt-to-GDP ratio has reportedly soared to, I think they said, 130%.
Wow.
Illustrating both the debt mechanism and the arms sales happening side by side.
And there was a fourth point.
Yes. Finally, war and instability create broader economic hardship. You see inflation, recession risks increase.
Which we're certainly seeing elements of now.
Right. And this forces countries to borrow even more just to cope, which perpetuates a cycle of debt and reliance that these sources claim is then exploited by the same financial groups.
It's fascinating how your sources connect these grand geopolitical strategies and these alleged profit motives directly to the mechanics of war and finance.
It's a core part of their analysis.
Now, when your sources start examining specific historical conflicts and gold's reaction, they make a crucial point about the timeline. They focus primarily on conflicts from 1971 onwards. Why that specific year, 1971?
Ah, yes, 1971. That year is absolutely key in their narrative. It marks the point when the U.S., under President Nixon, officially abandoned the gold standard, pulled the plug on Bretton Woods, essentially.
Okay, so the dollar was no longer backed by gold after that point.
Exactly. Before 1971, the price of gold was fixed, pegged at $35 an ounce under the Bretton Woods system.
$35 an ounce. Seems incredible now.
Doesn't it? So, while conflicts certainly happened before 71 and might have caused some minor temporary stress in markets, they couldn't cause significant, sustained gold price increases because the price was officially fixed.
I see. So with the dollar no longer tied to gold after 1971 and the U.S. government gaining the ability to, well, print money without that direct gold constraint, which the sources say increased over time, gold was essentially freed up. It could respond much more dramatically to market forces and, critically, to the kinds of pressures created by instability and war that your sources focus on.
That's precisely it. The sources argue this fundamental shift post-1971 is directly linked to the significant, sustained price increases we've seen in gold during subsequent periods of major conflict and instability. The leash was off, so to speak.
Okay, that makes sense as a starting point for their analysis. Let's walk through some of those specific historical examples you mentioned were highlighted in the material. How do the sources link them to gold's movement post-71?
Okay. Let's start with the Vietnam War, but specifically focusing on the periods from 1971 to 1975 after the gold standard break.
Right.
Your sources frame this primarily as a major conflict between two opposing systems. Socialism led by the USSR versus capitalism led by the U.S. A proxy war, really.
Okay.
And they argue this war, along with the need for the U.S. to print money to finance it in other global competitions like the space race, put immense pressure on the dollar.
Leading to
its depreciation and fueling inflation.
Yeah.
According to the sources, this intense period of conflict directly coincided with gold prices increasing dramatically, they say fourfold, between 1971 and 1975.
Fourfold? Wow.
And they also argue this whole situation contributed significantly to the final collapse of the Bretton Woods system itself.
Okay, so Vietnam post-71 fits their model. What's next?
Next, the sources look at the Soviet-Afghan War, running from 1979 to 1989.
Afghanistan, another major Cold War conflict.
Exactly. The sources present this again as a conflict with strong ideological undertones, a major struggle for influence in the Middle East and Central Asia between the two superpowers. They note it was a particularly fierce and damaging war for the USSR.
And gold's reaction?
The material highlights a really dramatic surge in gold prices during the early part of this war. It apparently increased fourfold again, but this time in just 1 year, between 1979 and 1980.
In just 1 year?
Yes, hitting a peak, the sources say, around $800 an ounce by 1980. A huge spike.
Was that just the war, according to them?
Well, your sources attribute this massive surge not only to the war, but also to other major events happening right at the same time. Things like the Iran hostage crisis, the second OPEC oil embargo.
Right, a lot was going on then. A sense of crisis.
Exactly, causing huge oil price spikes and a broader sense of global crisis, which really amplified that safe haven demand for gold. So, a confluence of factors, but the war was a major backdrop.
Okay. And what about the first Gulf War? In 1991, Saddam Hussein invading Kuwait. How do the sources describe that one's impact?
They actually characterize the Gulf War rather differently. They see it as a smaller-scale conflict compared to Vietnam or Afghanistan, involving Iraq's invasion and then the relatively swift U.S.-led coalition response.
And the gold price impact?
The material notes that its impact on gold was pretty limited, actually. They say prices did spike initially right when Iraq invaded.
As you might expect.
Right, a knee-jerk reaction. But then they quickly fell back down. The sources point out this whole episode happened within a larger downward phase for gold prices in that particular cycle. So the war didn't reverse the bigger trend.
Interesting. So scale and context matter.
Very much so, according to this analysis.
Okay, moving into the 21st century now. The Iraq War, starting in 2003 and lasting until 2011. Your sources present a very specific and, again, quite controversial underlying reason for this conflict, don't they?
They do. According to the sources, the fundamental reason claimed for the 2003 Iraq War wasn't WMDs, but rather Saddam Hussein's alleged decision to refuse selling Iraqi oil for U.S. dollars.
Not selling in dollars.
Right. And apparently seeking other partners, maybe euros or other currencies, and different partners for oil exploration.
Right.
Directly challenging the dominance of the dollar and, crucially, the petrodollar system.
And the sources see this as part of a pattern.
Yes, your sources place this within what they describe as a broader pattern of actions taken against leaders who challenge this U.S.-led global financial dominance. They mention others like Libya's Gaddafi, Venezuela's Chavez in similar contexts, suggesting a common threat.
And the link to gold during that war.
The material strongly links this protracted 8-year conflict to a very significant and sustained upward movement in gold prices.
How significant?
They state gold increased 8-fold, 8 times, from around $250 an ounce at the start to a peak near $1,950 over those 8 years of the war. They really highlight that correlation.
At 8-fold, that's a huge move.
A massive bull run, which they directly tie to the instability and the challenge to the dollar system represented by that conflict, according to their narrative.
Which brings us, inevitably, to the current landscape. Your sources focus on 2 fierce, parallel conflicts that significantly escalated starting around 2022. The Russia-Ukraine conflict and the ongoing complex situation in the Middle East.
Yes, 2 major simultaneous conflicts.
Let's start with Russia-Ukraine. What does your material say about the root causes presented there?
The sources attribute the Russia-Ukraine conflict primarily to what they describe as Russia's historical need for a strategic buffer zone.
A buffer zone.
And their view that NATO expansion eastward consistently violated Russia's stated red lines. That's the core reason they put forward.
And they mention specific events.
They specifically highlight the events of 2014 in Ukraine. The material details alleged U.S. involvement, mentioning specific names like Victoria Nuland, claiming some $5 billion was spent by the U.S. to support regime change.
Okay, that's a specific claim from the sources.
Yes, and noting meetings between U.S. officials and post-coup leaders. They even share a quote attributed to Senator Lindsey Graham, apparently saying Russians are dying, and that U.S. money spent in Ukraine is the most useful money we have ever spent.
That's a stark quote they include.
It is. And the source's view of the alleged U.S.-NATO goals in this conflict is presented quite bluntly. They claim the aim is to ultimately disintegrate Russia and also weaken Europe economically and politically.
Okay, that's the perspective on Ukraine from your sources. What about the situation in the Middle East? They describe that as incredibly complex.
Oh, absolutely, they do. The material describes the Middle East as a region just embroiled in conflicts spanning decades. Continuous clashes, sometimes simmering just below the surface, sometimes exploding violently.
Decades of conflict.
Yes. And your sources highlight the extreme complexity. They see it rooted in religious differences, certainly,
Yeah.
but also geopolitical factors.
Such as?
Such as, according to them, the U.S. attempting to maintain influence via allies like Israel, partly to keep Arab states divided and to counter potential influence from rivals like Russia or China.
Okay.
And of course, the long-standing territorial disputes, particularly between Israel and Palestine. The sources suggest that this incredibly tangled mix, combined with what they call constant external interference from major powers, just makes any lasting peace seem almost impossible in the region.
A very volatile and complex picture.
Extremely.
So your sources then look at the combined impact of these two simultaneous, intense conflicts, Ukraine and the Middle East both escalating significantly around the same time.
Yes, they stress the simultaneity.
What do they say the impact has been?
They state these parallel wars have had really significant and widespread global effects. We've seen major disruptions to supply chains, right? Surging inflation in many countries, increased risk of recession globally, and very high oil prices. They note a peak of $123 a barrel at one point.
And the sanctions.
Yes. They also point to the unprecedented scale of sanctions imposed against Russia. Mention, I think, over 40,000 different sanctions being pulled from the SWIFT payment system. Asset freezes. A massive economic campaign alongside the military conflict.
And how do they connect all this back to gold?
The sources specifically link the intensity and, again, the simultaneity of these parallel wars directly to a significant increase in gold prices. They state gold increased about 1.5 times in value in just 1 year during 2023, driven by these combined crises.
1.5 times in a year, so reinforcing their core thesis.
Exactly. More intense parallel conflicts leading to a strong gold price response.
Your sources also briefly touched on the idea of gold prices moving in long-term waves or cycles. How do they connect these major conflicts to those broader cycle theories?
Right, they bring in that element too. They basically correlate the major wars we've discussed, like the Vietnam War influencing the rise after 71, the Soviet-Afghan War contributing to that big peak in 1980, and then the Iraq War starting the strong climb in the 2000s. They see these as drivers or turning points within significant upward movements in these larger gold cycles.
So wars marking key phases in the cycle.
Essentially, yes. And they even reference a recent gold price peak, somewhere around $2,780, as potentially marking the end of a specific upward subwave within the current larger cycle, maybe followed by a correction phase. It's another layer where they see geopolitical conflict influencing the broader, longer-term trend in gold.
Okay, so pulling all these different threads together from your sources, you've got the basic safe haven effect. Then this more controversial layer about alleged financial magnates and their strategic tools, the specific historical examples post-1971, the analysis of current conflicts, and even these long-term cycles. What are the core overarching conclusions that your sources present about this relationship between geopolitical instability, war, and the price of gold? What's the bottom line from their perspective?
Well, the conclusions presented in the material are actually quite clear and consistent throughout their analysis. First, they argue forcefully that geopolitical instability and war, particularly large-scale or system-level conflicts, driven by the kinds of forces they describe, tend to consistently lead to significant increases in gold prices.
Okay, conclusion one. Instability and war push gold up.
Yes. Second, your sources argue that the scale and intensity of the instability or conflict directly correlate with the magnitude and the duration of the resulting gold price increase.
So bigger war, bigger gold rally.
Essentially, yes. The more severe the conflict, the bigger and longer the gold rally is likely to be. That's the pattern they present based on the historical examples since 1971.
And the third main conclusion.
And third, they conclude that the ongoing fundamental struggle they described, this clash between forces pushing for a unipolar world versus those seeking a multipolar world. They believe this struggle is actually still in its relatively early stages.
Still early days.
That's their assessment. They believe this struggle will likely intensify in the future, and as it does, it will continue to be a major, significant influence on gold prices over the long term. It provides, in their view, a fundamental geopolitical underpinning for gold's price movement for potentially years to come.
And building on those conclusions, the main recommendation from your sources is quite pointed, isn't it, for anyone interested in gold?
It really is. They strongly emphasize that for anyone looking to truly understand gold prices, whether you're thinking about investing or you're just curious, it's simply not enough to just follow the daily media reports or the headlines.
Need to go deeper.
Exactly. They argue you need to look beyond that surface noise and really study the underlying nature and the dynamics of these geopolitical conflicts. Understand the deep-seated forces that they claim are driving them, as they've tried to lay out in their material.
And if you don't?
Well, they argue that ignoring these foundational dynamics makes you vulnerable. Vulnerable to misunderstanding market movements, getting caught out by shifts, and potentially making poor decisions based on an incomplete picture.
Wow. That was quite a journey through this material, wasn't it?
It certainly covers a lot of ground.
Yeah, from the inherent complexity of gold itself, which we started with, to the very specific and sometimes, yes, stark connections your sources draw between these huge global power struggles, historical conflicts, and gold's price movements. This deep dive has definitely revealed a very distinctive viewpoint on the forces they see at play.
It does offer a particular lens.
It really forces you, I think, to look beyond the surface chatter.
Indeed. The material really challenges you to look past the daily ups and downs, the news flashes, and consider the longer-term strategic aims and historical patterns that they claim are shaping not just geopolitical events, but also something as seemingly disconnected as the price of a metal.
Yeah.
It's a complex picture, no doubt, but one your sources argue is absolutely crucial to understanding gold in any meaningful way.
And thinking about their final conclusion, that the struggle they've described, this unipolar versus multipolar dynamic, is perhaps just beginning. That really leaves you with something significant to ponder, doesn't it?
It does. A big question mark about the future.
Yeah, how might the future evolution of this global power dynamic continue to shape not just financial markets like gold, but the entire world order itself? And, what could that ultimately mean for you listening to this?
Definitely food for thought.
Absolutely. And if you are interested in diving even deeper into some of the specific perspectives and authors referenced in the sources today, they did mention works like Brzezinski's The Grand Chessboard or the Currency Wars series as places where you could explore some of these ideas further.
Some heavy reading there, potentially.
Potentially, yes. Well, thanks for joining us for this deep dive into your sources on a really complex and frankly quite thought-provoking topic.
My pleasure. Always interesting to unpack these materials.